Thank you. Thank you so much, Susie. I'm delighted to be here. And I'd like to start this session by talking about Chang Heng. Chang Heng's wound was minor, but the impact on his family was severe. The 31-year-old garment factory worker was riding his motorbike to work when he collided with a bicycle 30 kilometers west of Phnom Penh. His broken clavicle required surgery, costing $250, leaving him out of work for 1 month and forcing him into debt. As the primary breadwinner of a family of 10, contributing 1/2 of his total monthly income of $300, it would take at least 3 months to repay his debt. Chang hopes to manage by finding additional work at a nearby factory. Now, Chang's story is by no means unique, nor is it the most dramatic or the most heart-wrenching stories out there. The occurrence of a risk can set a family back an entire generation. And so it's imperative to learn to avoid risk where possible and always, always to mitigate and manage risk. Now, fundamentally, people seek security. It is a very basic human need alongside clothing, food, and shelter. And what we will do now in this session is talk about protecting against risks and achieving that security. And I'm delighted to have with me 2 exceptional panelists to have this conversation. They are both deeply experienced insurance specialists, one with an insurance company that holds the top 5 position in many high-growing emerging markets, and one that is with the 2nd largest reinsurer in the world. To my immediate right, I'm delighted to introduce you to Michel Khalaf. Michel is the president of MetLife's Europe, Middle East, and Africa region, and he's also a member of the company's corporate executive board. And he's also on the board of MetLife Foundation. Now, Michel has led leadership positions in many insurance markets around the world, including Egypt, Poland, Romania, Italy, France, the Philippines, as well as numerous countries in the Caribbean and in the Balkans. Welcome, Michel.
Thank you.
We also have Martyn Parker from Swiss Re with us. He's the chairman of Global Partnerships and member of the Group Management Board. In this role, Martyn builds and deepens business relationships with public sector stakeholders, including government and NGOs. Martyn has significant Asia experience, having been based out of Hong Kong for some time. Part of the vision of financial inclusion is access to a full range of financial services. Insurance is often referred to as the last mile, a different last mile, as a last mile in ensuring access to a full suite of financial services after savings, credit, payments. So Michel, I'd like to start with you. Do you think that insurance should not be an immediate priority compared to the other services? Should it be sequenced afterwards? What are your thoughts?
Well, as an insurance person, I think you'd expect me to disagree with that, and I'm not going to disappoint you. I think it's obvious that when you think about access to credit, access to bank accounts, savings, those are obvious pillars of an inclusive financial system. But I would argue that insurance is an equally important component in that system. Think about a micro-entrepreneur that borrowed to build up inventory to start a business or to build up a business, and of the impact of an unforeseen adverse event, a calamity, a fire, for example, on that business. Not having access to insurance, to protection, can certainly create significant difficulties in terms of not only repaying the debt, but also in terms of successfully managing that business. And even when you think about savings, Typically, savings are, even when you think in the context of a middle market, not only in terms of a low-income market, savings are rarely sufficient to cover, again, adverse events, a health emergency that would prevent a micro-entrepreneur from working for an extended period of time, for example. So, I would like to think about insurance as an integral component that complements a financially inclusive system or portfolio rather than an afterthought or just a last mile, as you described.
Excellent. A complementary component. So it's not about a sequencing, but actually the different services reinforcing each other. What's your view on the same question, Martyn? And especially as a reinsurer, sometimes that feels even more remote to poor people.
Okay, I think certainly I would agree with Michel. So it's an integrated offering. And I think that one of the reasons people think of it as last mile is because it's been an evolution. You've moved from microfinance and actually getting some credit into people's hands into different financial services. So when Henry Ford pushed his first motor car off the production line, there were probably no seat belts in it and no airbags in it in terms of risk management. But I doubt that any of you would go and buy a car now that was sold on the premise that had no seat belts and even no airbags. So from a evolution point of view, I think insurance came after, other things developed. But we're at a stage now where it should be envisaged as integrated. So in a developed market, if you were going to borrow money to build a factory or another physical premises, or you're going to open a new airline, insurance is one of the first mile questions because you won't get the financing without the benefit of that kind of protection. So I think as time goes on, we'll find that in the financial inclusion space, insurance will become a much more regularly sought after piece of the financial inclusion offering, particularly to help people when they suffer these setbacks.
Very good, thank you. So insurance almost has a role in unlocking actually some of the enterprise that can then benefit from saving services like credit, for example.
Exactly, and then to the reinsurance question.
Yes.
A reinsurance organization is an insurance company for insurance companies. Yeah. So for those of you not familiar with it, you can think of us as wholesalers of risk, and we work with hand in glove with companies such as Michel's company in a number of areas such as product development, pricing, risk management, and ultimately risk transfer, where perhaps Michel's company and others are unhappy to keep too much balance sheet exposure to particular cohorts of risk that they will then lay off to the reinsurance market.
Great, thank you. So Martyn, let me stay with you and let me I'd like to hear from you to understand what's driving really Swiss Re's entry into emerging markets. And when you say entry into emerging markets, is that synonymous with also trying to reach base of the pyramid customers?
Yeah, I think it probably goes back to the tsunami of 2004. When you look at the economic losses that were suffered by the citizens, by the middle-class citizens as well as the poor, bottom of the pyramid citizens, and then the corporations and even the governments with cleanup costs and so on, what we realized was that the economic losses far outweighed any insurance payments. So there's what we've termed a protection gap existing for all of those stakeholders in that economy. Now, we don't see that as a near miss. We don't go, what would the share price have been if we'd been exposed here? What we're saying is certainly it's an opportunity, but more we feel it's an obligation to provide coverages to close that protection gap, both at the micro and the macro level, which is what I have the pleasure to look after from Swiss Re's point of view. I think when we think about it, one of the reasons we've integrated ourselves into this discussion is because the insurance opportunity, I think, I'd like you to think about it as I do, as a ratchet effect. So if somebody's borrowed some money, they have the accident, they're off work, they have the fire, they lose their assets. You're in a scenario where they wake up the next day, they probably have money that they owe and they can no longer repay. They've lost their livelihood in some way. And maybe they become even then financially excluded from something they just become to be included in. And insurance can give them a ratchet. So they buy insurance and they wake up the next day and their dwelling can be rebuilt, their loan can be forgiven by an insurance payment, their stock can be refurbished. And there are lots of opportunities for us to set themselves back financially post-trauma in the same position they were before the trauma. And it just so happens that if you look at emerging market economies, that's where a lot of the bottom of the pyramid population lives. It's a lot of often coinciding potentially with their development that Mother Nature happens to wreak havoc from time to time. London's in chaos, and for that I live here and I apologize, but it's just a breeze compared to some of the things that other places are exposed to. And that's why we need to be integrated to this.
Just a breeze, no pun intended. But yeah, so then describe to us what kinds of products you're able to offer in emerging markets, what market segments you're able to reach, but also what products would you like to be able to offer? What market segments would you like to be able to reach, but somehow cannot for either cost reasons or technical feasibility reasons?
Yeah. So we always say in insurance we have life insurance. So we cover people who die too soon, live too long, get sick in the middle. So we try and offer that panoply, and I think that can operate also in this sector. I think in the physical assets we can aim to protect those. But I think in the microinsurance sector, one of the things that we spend a lot of time working on is agriculture insurance, crop insurance. Sometimes the bank are a little bit nervous about lending the money, and I think if insurance is in the mix, then the banks can sometimes feel more comfortable of it. And with crop insurance, what we're looking to do is, if there's too little rain or too much rain, for example, then an insurance payment will trigger. And insurance companies, in offering any of these benefits, have to kind of throw away our standard operating procedures. There's too much cost embedded in our history of how we deal with our clients, which, dare I say, many of you are clients of insurance companies. It costs a certain amount of money to come and understand your needs and to service those needs, behave in line with regulation. So there's a lot that gets in the way we've built our history of an insurance industry with the way we need to be in the future. So I think products which are easy to get to the client, built from the client's fundamental needs, not us sitting behind our mahogany desks and saying, I have an idea, I can sell 5 million people this, and it may not meet their need. That would be a rather foolish scenario, but it unfortunately has happened. We've seen that kind of thinking in the industry. So whenever you're thinking about insurance as an opportunity, I think, in the marketplace, do think of all types of insurance. Do think about ways in which the product can be distributed and maybe packaged with other transactions that people are taking to give them that ratchet effect. And I would say the other interesting thing for us is we have to be able to distribute quickly and cheaply. We have to fulfill our promises at the claim stage, again, quickly and cheaply, and get the money there quicker than we would for, say, middle-class citizens who have other buffers.
Just to emphasize one of the main challenges in reaching this particular segment is the cost of delivery and the ease of delivery. And I think here, partnering with banks, with microfinance institutions, with telecoms, for example, can make a big difference in terms of making these products and services, available and accessible, to that segment.
Absolutely, and we'll come back to sort of solutions to some of the challenges in a second, because I think that's critical. But I want to press just a little bit more, because I don't think I heard you really talk about those services that you're not yet able to offer. You said look at a broad range of services, but which ones right now? I mean, I think it's important for us to know what's doable, what's possible now, and what's not.
Yeah, I would honestly say that all of the range of products that I described are possible.
Okay.
One of the issues, I think, for the insurance industry is reaching scale, because I don't look for any forgiveness. We're here to make a profit for our shareholders ultimately, and Swiss Re has been involved, and many insurance companies have been involved in real proof of concept stuff, which 17,000, 80,000, 125,000, 200,000 policyholders have benefited post a big event. But we need numbers bigger than that to get scale. So the one thing I would suggest that we as an industry need to unlock is how to take this proof of concept of this is a product in the hierarchy of needs of the individual who's prepared to pay for that product, but how do we scale it, because we still have a certain amount of fixed cost, even if we can get our operating costs per transaction way down from our standard operating models.
Okay. Now, this issue of scale is a critical one that we'll come back to as well. But let me turn to you, Michel, now. I mean, microinsurance is now a very popular term. We have the microinsurance network that Susie mentioned with over 64 members. But before the term was coined, my understanding is that MetLife was actually focusing on low-income customers, that you had a very strong global footprint. So can you tell me about this history?
Yeah, actually, this traces back to MetLife's beginnings, 1880s. where the company was focused on what was called at the time working men insurance, or better known as industrial insurance. And those were very small policies, 5 to 10 cents, that actually MetLife agents would visit and collect on a weekly basis. And the MetLife agent became sort of a prominent figure in the lives of families and households in that era. And I think that tradition continues and persists today, especially in the context of many of the emerging markets that we serve. Part of our strategy is to grow the contribution of emerging markets to MetLife to 20% by 2016. And if we think about emerging markets, typically we think about the middle class and a growing middle class. But again, the growth in the middle class is coming from lower income households that are moving themselves out of poverty and into that middle class. And that's an interesting segment that presents some challenges, but also many opportunities and an area of focus for us in the company.
Thank you. And one of the things that I've learned about MetLife is this focus on the customer being important. And Martyn earlier referred to not thinking about the customer's needs from behind your mahogany desk, which I like. But it can be hard. There's a whole entire roadmap on addressing customer needs as part of Financial Inclusion 2020. And it can be easy to say but hard to do, really focusing on client needs and understanding them. How does MetLife do that?
Yeah, I mean, we call it customer centricity, and it's a focus area for us. Actually, it's the one area that we believe can give an insurance company, especially in our industry, a sustainable competitive advantage in the long run. Now, going back to the point about products and services, I think the important thing there is not to assume that solutions that work for any segment can be easily modified to fit into the low-income segment, for example, and not to assume also that solutions that can work in certain markets can work in any market. So, if you think about, burial insurance, for example, which is sort of culturally almost required in many markets and many cultures, that may not necessarily be the case, in other markets or other cultures where, a burial event is a very private one that doesn't necessitate, a major investment on the part of the family. So it's really looking at the needs of each specific market, at the specific segment, and designing products that really fit and meet those needs, and then making sure that there's a delivery system to make sure that that segment of the market has access to these products and services.
And so two follow-up questions for you, Michel. The first is really if you can give us almost a specific example about how you actually uncover these cultural norms, burial, private or not private. What techniques do you have in place at MetLife for that? And then if you could give us an example of a standard product that you had perhaps in a developed country setting and how it was adapted for emerging markets.
One, in many instances we've learned the hard way in that we've done it and it's failed, and now we know to do it in a different manner and in a better way, we think. A lot of it is around market research, talking to customers, focus groups, making sure we understand their needs, making also sure we understand the priorities, and ensuring that again we offer integrated solutions, because we also know that there are other needs that are also as pressing, so we cannot ignore those. I can give you an example, for example, in Colombia, where we've partnered with a microfinance institution, and we've designed a product that doesn't only protect the loan or the debt in case the borrower is death or disability, but also protects the assets and protects the family's health. And that was the result of research that we did that showed that just protecting, just providing life insurance would not be sufficient or would not be adequate for that particular situation or for that type of market. And for that we had to partner with a non-life provider and with a financial institution, obviously. So it's about innovation and trying to find solutions that really meet the specific needs of a specific segment in a specific market.
Thank you. So, Martyn, you said unabashedly, we have to make money, which I think is right. And so my understanding is that the Global Partnerships unit that you share is a commercial unit like others.
Yep.
I'd like to understand sort of the behind the doors conversations that happen between you and the CEO around commercial targets, around length of time for reaping your investments, when you're talking about an area where the premiums might be lower and the costs might be higher. Do you think about profitability differently, or is it just the same?
Thank you. Wise man once said, never report to a boss who used to do your job, and our CEO used to do my job. So, our conversations are actually very rich and plentiful, and he's got a very strong personal interest in all of this, which is a great place to work in and report to. As I say, it is commercial. Like Michel, we've paid our school fees and some in terms of some of the experiences that we've had, and we've had to modify some of our thinking there. But we are built to be here for the long term. We are prepared to firstly do research and development, then bring to market opportunities we think meet needs. We monitor that, we modify them in the light of experience, we try and innovate, and I'll give maybe one example of that in a moment. And then we go again, and scale is the last piece for us. So where we start work, we have a certain amount of fixed cost, obviously, to price a certain risk in a certain market and take the data and analyze it and come to a conclusion. We're very prepared to do that on pilot-by-pilot cases, but we have to have an end game in sight. And I would encourage everybody who's in this journey not to lose sight of what the end game looks like, whether you're on the insurance side or another piece of the jigsaw. One of the innovations that we came up with, and is proving quite popular, was aimed at the question of trust of insurance companies. I'm going to resist the temptation to ask to put your hand up if you've ever had a battle with an insurance company at the time of a claim, but I have. And I think you bump your car and you have to wait for some chap to come round and look at it and say, "Oh, you've had a crash." And you go, "Yeah, I know that," and figure out how much they're going to pay you in settlement. One of the things we do with the crop insurance now is if there's too much rain or too little rain in a physical geography that's been mapped, independently assessed through weather station technology or even satellite technology, then the event is triggered for all the policyholders in that location. So there is no loss adjuster, there is no negotiation, the claim pays. And we can do a similar situation with hurricanes on wind speeds, we can do a similar situation on earthquake covers, and indeed have. And an earlier conversation I was in today, people were talking about being able to respond to people very quickly, being able to meet expectations and promises, building trust, getting a good track record. And I think innovation of these claims triggers, which, frankly speaking, at the moment, middle-class citizens don't have exposure to that opportunity, I think is something which is really good. Because if I say to you, Alexia, Michel's the judge of whether I need to pay you, and I will respond because he measures it completely independently.
No, that's a great example. And Diana Taylor, in her opening, talked about the role of government. And I'd like to hear from, still staying with you, Martyn, I'd like to hear from you. Are there moments where, to be able to operate as a private commercial organization, you need the public sector to come in? And is there any example of a product that you've worked on where there's been that kind of public-private partnership that has really enabled something to happen?
Yeah, I think a lot of it will come back to the regulatory environment, and I'll need to comment separately on that in a moment. But I think governments probably have to take care of the poorest of the poor, where there will be no sustainable insurance market. I think beyond the poorest of the poor, and we can figure out a definition around of that, there's a lot of development agency money coming in, there's some government money coming in terms of subsidies. But my wish and my hope is that at a point not too far down the road, the hierarchy of needs of where to spend my few dollars a day will include an insurance offering for many of the folks out there. Governments, for good reasons, they have regulations in the banking industry, they have regulations in the insurance industry, and there sometimes can be accidental consequences for the insurance industry reaching these customers with these offerings because the regulation has been framed for a different part of the marketplace. So I think, as Indonesia's just done, I think October 17th announced a new forthcoming regulatory perspective, which will be very enabling to the marketplace. Hopefully it'll be clear, it will be stable over time, and that's something that the governments can do beyond short-term subsidization and encouragement, I think.
And I think you partnered with government also in India with the RSBY program, didn't you? Do you want to tell us a bit about that?
Yeah, sure. The RSBY program is a health insurance scheme for families up to 5 members. It was introduced in 2008, and it's got sort of 100 million plus members in the scheme now. The individual families will pay, I think 30 rupees was certainly where it started. I'm not sure where it is today. And then the state government and the federal government will pay the rest of the subsidy, 75%, 25% respectively. There's over 1,000 conditions included in this medical program for which people can claim fixed benefits. And it's been syndicated out, I think, amongst, my last knowledge, at least 13 insurance companies in India to handle the education and distribution side of it. And Swiss Re is proud to be part of the policy design and part of the pricing aspects and also part of the reinsurance piece. So I think that's something that's done a huge amount of good for a huge part of the population there. And it's something that I think is not too challenging to see replicated in other parts of India and, of course, in other countries as well.
Thank you. I wanted to talk about this example because if we talk about diversity of products, I think health insurance, as we see in this very country, is very complicated and is arguably a place where there's scope for that public-private partnership, perhaps most strongly so than other services. And it's also one of the services least offered right now. A lot of the data that we have shows that life insurance is quite available, credit life is quite available, accident, property, but on health, we're still far behind. You have an interesting perspective, Michel, because you're both, as I mentioned earlier, the president of Europe, Middle East, and Africa. You're also on the board of the foundation. So I'd like to hear how you view MetLife as a corporate and sort of on the foundation side, addressing inclusive insurance.
I mean, I think sort of if you look at our mission, which is to help people pursue more from life, and our focus as a foundation, I think they're very complementary, so we view ourselves as a corporation, as an organization. Our focus is on providing financial solutions that meet the needs of the populations and the markets that we serve, to do it in a customer-friendly way. The focus that we've chosen as a foundation, and we've committed $200 million over the next 5 years in support of this cause, of this area, financial inclusion. We feel is very much aligned, to our purpose as a company. It's also, I think, an area where, as we change our focus from sort of being a US-centric organization, also a US-centric foundation, into a more global one that operates in many emerging markets around the world, one that also makes a lot of sense for us at this point in time. And the initial feedback from our associates across certainly my region, EMEA, has been highly positive, high degree of engagement. So we think those are very complementary in nature, and we think it's an area that hopefully we can make a difference in, both as a corporation but also as a foundation.
Great, thank you. So at this stage of the conversation, I'd like to open up for questions. Our panelists have raised the importance of starting with client needs. They've talked about the importance of getting to scale, but the challenge, we have more pilots than we have scalable successes today, and the promise of technology, a topic of one of the roadmaps to help, as well as the key importance of understanding distribution and potential partnerships around distribution to be able to reach low-income customers. So we welcome questions from the audience. I see one here. Oh, and please.
Okay. My name is Andrew Pospielowski. I wear lots of different hats, but for the purpose of this question, I will wear my hat as a former CEO of Axis Bank Azerbaijan. A couple of years ago, we tried to actually implement life insurance for our borrowers. We wanted to bundle it with loans. And we were looking to partner with a major global insurance company that was supposedly committed to microinsurance, and the project had support from their head office level for this. This was a strategic decision at head office level to support this. Our negotiations broke down over two issues. First issue was that dispersing tens of thousands of loans every month, we have to be, with small loan sizes, micro loans, we have to be very efficient in our processes. So what we wanted is a very, very simple product which just simply said that if you die, your outstanding balance of your loan will be repaid. So we wanted one line in the loan contract, in our one-sheet loan contract, which said this. This was not acceptable for the insurance company, which wanted a whole list of exclusions, nuclear radiation, whatever, okay. Which then would take our loan contract from one sheet of paper into two sheets of paper, and adding costs and so on. The second issue it broke down over was the fact that while we have a large portfolio, the structure of the portfolio does not change from month to month. So we said to the insurance company, okay, you analyze our portfolio, the gender profile, the age profile, and you calculate one rate, and we pay that rate on a monthly basis on the whole outstanding balance of the portfolio. This again was unacceptable, and they wanted to calculate the premium on every single loan individually on a monthly basis based on gender and age. And we were saying, look, do this once a year, do this 6 months, however often you want, but let's keep this simple. So my question is that I very much believe in the need for insurance, for especially life insurance for borrowers or working incapacity. We wanted to start with life, then we wanted to progress to loss of working capacity. But the question is in order to do that, I think there has to be a new approach from insurance companies to simplifying products, making them very simple for these markets. And so my question is what do you see happening in this sector towards that direction? Are you seeing actual insurance companies doing this? And if you can comment on that, thank you.
Great. So I think we're going to take a few more questions and we're going to answer them as a group. It was a plea as much as a question. Here, please. And as sharp and concise as possible.
Thank you. My name is Craig Churchill from the International Labour Organization, where I head up the Microinsurance Innovation Facility. Thanks for this great session. I'm happy to hear insurance being the lead. As the chair of the Microinsurance Network, I think it usually gets last place, so it's nice that it's the beginning of the discussion. My question is, you came at this very much from a supply side, talking about what's you can provide, what's available. I'd like to hear about it on the demand side. What can insurance companies do to stimulate demand and get customers who are unfamiliar with insurance to be able to get more traction? And do you see this as a role for insurance companies or other players instead?
Great. Okay, the other side of the room. Yes, please.
My name is Yemi Dada. My question is directed to MetLife as speaker and the insurance. Since we are talking about disability global, what is MetLife's approach from experience in Colombia regarding life insurance and health insurance, particularly regarding disabled clients?
Great, thank you. We'll take one more. Who has, there's two hands there. Okay, go.
My name is Irene Filippi. I'm also with U.S. Treasury.
Please, the mic.
Hi, my name is Irene Filippi. I'm also with U.S. Treasury, but on the international side. And I'm on the ground helping countries change the regulation so that it becomes more inclusive. So the question is, as more countries have the regulatory framework for mobile financial services, I see this budding trend of being able, for instance, to discount from your prepaid balance in your cell phone the health insurance premium or other type of premiums. So because you spoke about the distribution and the possibility of these new alliances with the telecoms, I would like for you to kind of develop that point a little bit more. And then the other issue was, how do you help people change their own cultural traits? Because when we say, well, people don't have a way of mitigating risks, they do have them, but it's less efficient. They have the social network, they have the family, they have their church. So even the Latinos, when they arrive in the United States, their level of insurance is much lower. How do you deal to, create this new awareness that this is a good way to go? So those are the two questions. Thank you.
Great. And then let's just take, I'm sorry, we haven't had too many questions from the back, so let's last question from the back, and then we're going to have to close this round. Let's just, I'm sorry.
My name is S.R. Sinha. I was a professional banker doing small ticket personal loans, but I thought it just falls short of helping financial inclusion. So I came out and set up a microfinance institution. My question to the panel is, would you like to candidly admit that as the banks, traditional banks have failed to do financial inclusion, traditional insurance companies may not be able to do that, and there's need to provide capital and set up insurance companies like microfinance institutions focused to this segment to do justice?
Capital. Okay, great. So we have quite a range of questions. Why don't we start with the question of let's start with the customer, the question of stimulating demand. Is there a role for insurance companies, reinsurers, to help stimulate demand? And if you could also, as you do that, touch on this question of the sort of cultural norms and the fact that maybe official insurance is not sort of understood or people are not aware of it, even though there are all sorts of informal mechanisms. And as we formalize, what can you do to help?
Sure. So, clearly the industry, has an important role to play in terms of increasing the level of awareness of the importance of managing risks and, some of the products and services that all segments have access to, including the low-income segment. But this is also, a broader, mission, I think, where, government, regulatory bodies have also an important role to play. Partner institutions also have an important role to play. So while the industry should take, the lead role, certainly, we need support from, many other constituents. I think one of the important elements in this regard, and this touches also on some of the comments around, some of the products and services and the like, is that, when we think about customer centricity and about awareness, we should also think about accessibility, because I think insurance companies and insurance products give a perception of being too complex, too sophisticated, too hard to understand. Mm-hmm. And that's also driven by the fact that yes, some of our contracts are complicated. Some of our procedures can be complicated as well. So, when we think in terms of customer centricity, we need to think about ways of how to simplify, all of these things, make ourselves much more accessible to a much wider segment of the population, make our forms, our applications, our contracts also, as simple as can be, perhaps even by removing some of those exclusions that can, create some issues. And obviously there are also, limitations when we talk about scale, for example, when we talk about experience, especially in segments where, there isn't, that much of an experience. That creates some challenges. But I think there are ways of overcoming those things as well. So for me, when we think about awareness, about education, it's more than just, campaigns by insurance companies, but it's more about, how do we make ourselves much more accessible, much easier to, to understand and to do business with from a customer perspective.
And the financial capability roadmap talks about learning by doing, and having, by the virtue of having access is part of the process. Just quickly, and then we'll turn to Martyn. If you want to touch on the question of disability, MetLife and...
Yeah, I mean, I don't know what the experience in Colombia in particular. It's outside my region, so I excuse myself on that front, on the disability front in particular. But again, the way we looked at the product that we offered at Colombia was not just as, it was a package of, of protection. Some of the protection was, to the individual, to the borrower. Some of it was, protecting the assets, and some of it was protecting the health of the family. And so far the experience has been positive, and we're looking to expand in terms of the offering of this product in that market. But that's a product that's very much specific to that market into that country.
Okay, great. And then Martyn, if you could take both the questions, the plea from Alex about efficiency and simple products, is there a way to really simplify things to reach this new customer base, as well as Mr. Sinha's question?
Yep, thank you. I think on the, I'm going to be careful how I answer this, because if this gentleman says this company was my company, I'm going to be in trouble. But I think,
names.
I mentioned earlier on standard operating procedures, and it sounds as though, frankly speaking, the head of the dinosaur agreed with you at head office, but the tail's swishing around here a bit uncontrolled and doing what it always did. And you need to find ways, and if there are ways to do that, and what we would call in the industry like a community rating approach, where you bundle in from your census data the population, the gender, the ages, and so on, and the amounts of the loans, and you can find a rate there. Nuclear exclusions are probably unnecessary in this, and I would imagine most of it would be fairly short-term cover anyway. So the industry, and if it's our organisation, but the industry's failed itself somehow within that. So there are ways in which that can be done, I think. I think on the, should we have special insurance companies set up, they're a very interesting challenge, and I know many of you will be familiar. I think Andy Kuiper's here. He's going to be around. There's an institution called Leapfrog, which is doing a lot of investment in organizations and trying to help them develop products for the bottom of the pyramid community. And Andy and his team is working with existing companies to reframe themselves. I think there is a strong possibility insurance companies will be set up to do this, and they won't have the baggage and the legacy systems and issues and costs of others. I don't think it's entirely necessary. And I think just mention company many of you will be familiar with, Allianz. And if you go to their website, very public information on how they've been progressing in this particular area. And at the half year June, I'll just read the figures. At half year June, they'd increased year on year from protecting around about 9 million people to protecting 24 million people. They had, so that's 140% growth year on year. They're writing about a 48 million euro gross written premium, and it's multinational, international. So if you go on the website, you'll see where it is, and it's across all sorts of different products and lines of business, as we would describe them. Just going back to defend my insurance company that disappointed you so much, one quick thing is that what you got caught up in was what we call underwriting processes. And whilst they can be standard operationalized, insurance companies will always need to protect ourselves from smart human being behavior. And I'll give you a very quick example of this. We did Aquaculture Insurance, which is a kind of agriculture insurance, life insurance for shrimps, basically. And our guys, it's really true. Our guys put out this life insurance for shrimps, and they just forgot one thing, is the shrimps, when they get to the restaurant table, are dead, usually. And somewhere in this process, we had the claims for the shrimp loss in the aquaculture that we paid, but we learned there was a problem with the way we designed the product because a smart human being was able to find a way through it. So there is a need for self-protection so prices don't have to go up for everybody else. Alexia.
Excellent. Unfortunately, our time with the dead shrimp and the life insurance for shrimp is coming to an end. 3 quick points as we wrap up. The first one is I think that we live in a world where we have long-standing risks facing us, accident, death, health, but we also have new and emerging risks linked to natural resource depletion, linked to climate change. And so tools to manage and mitigate risks, fundamentally important. Important, and we're not trying to now say above and beyond every other financial services, but it's about the interplay of the financial services and how they work together to protect, grow clients and businesses. And finally, small can sometimes be beautiful, but in the case of insurance, absolutely not. The larger the risk pool, the better we are off. And having these 2 gentlemen and the companies that they represent engaged in trying to reach emerging markets, in trying to reach low-income customers, holds a lot of promise. So thank you, Martyn. Thank you, Michel, very much.